It is Thursday evening, August 20th, 2026. Welcome to a special mid-month update. In addition to our regular SOXL monthly update, I may occasionally publish this kind of second update about 2 weeks after the main monthly video, especially during periods of severe volatility like we are experiencing right now. SOXL has been moving so fast and so dramatically that waiting a full month between updates just does not make sense during a stretch like this one. Let's set the stage with a quick recap. SOXL hit its brand new all-time high of $302 on June 22nd. However, SOXL then plunged all the way down to $91 on July 29, 2026. That is a brutal decline in a very short window. Then, something familiar happened. SOXL was able to rebound on July 29 right after touching the SMA 200 green line. This pattern should feel familiar to longtime viewers of this channel, because it closely mirrors what happened back on March 30, 2026, when SOXL rebounded from $39 after also touching the SMA 200 green line. Here is why that comparison matters so much. For the following 3 months, from March 30th all the way to June 22nd, SOXL climbed from $39 all the way up to $302. That is an extraordinary run driven by a bounce off the exact same technical level we just touched again. So the natural question every SOXL investor should be asking right now is this: are we about to repeat a similar 3-month journey starting from this most recent bounce? Although many experts in the financial media are currently saying that semiconductor stocks lost their power in July 2026, I personally think we still have a good chance to climb again over the next several months. Let me walk you through the recent price action so you can see exactly what I mean. Since July 29th, when SOXL bottomed at $91, SOXL was able to climb all the way up to $157 on August 17th. However, it has since pulled back down to $122 today. This kind of choppy, 2 steps forward 1 step back action is completely normal for SOXL, and I want you to expect more of it. As you probably remember from our previous videos, even during that incredible 3-month run from $39 to $302 earlier this year, SOXL still experienced several sharp crashes along the way, including a 45% crash from $284 on June 3 all the way down to $157 on June 9. Volatility within an uptrend is simply part of how SOXL behaves. It is not a sign that something has gone wrong. Currently, SOXL remains above the SMA 200 green line, which is an encouraging sign. We will continue to closely monitor whether SOXL can rebound again either near or above this critical SMA 200 green line in the coming days and weeks. Now let's examine the SOXX daily chart in detail, since SOXX often gives us clearer technical signals than SOXL itself. SOXX closed today at $522. SOXX is significantly down from its all-time high of $655 set on June 22, but it remains notably much higher than its dip low of $464 recorded on July 29, 2026. For those new to the channel, let me quickly explain that SOXL is a triple leveraged ETF that magnifies the daily movements of SOXX, which tracks leading U.S. semiconductor companies such as Micron, AMD, Broadcom, Intel, Marvell, NVIDIA, TSMC, Applied Materials, Lam Research, Qualcomm, and Texas Instruments. Here is an important technical detail worth highlighting. SOXX climbed from $464 on July 29 all the way up to $566 on August 17, but at that point it was unable to break through the SMA 50 purple line. SOXX is currently sitting below the SMA 50 purple line, though it remains much higher than the SMA 200 green line. Based on this positioning, I expect that SOXX will test the SMA 50 purple line again soon, and I believe it has a strong chance to eventually break through that level within the next few weeks or months. Now let's add Bollinger Bands to our analysis, since this tool has proven to be genuinely useful for timing SOXX entries and exits over the past several months. As we have previously discussed on this channel, whenever SOXX moves outside of the Bollinger Bands, it tends to reverse back toward the inside of those bands relatively quickly. Let me give you several recent examples so this pattern really sinks in. When SOXX moved outside the top of the Bollinger Bands on May 11, it subsequently plunged. When it climbed above the top line of the Bollinger Bands again on June 3, it plunged once more. When it broke above the top line yet again on June 22, marking that all-time high, it plunged a third time. Do you see the consistency here? 3 separate instances, 3 separate reversals downward. The exact same pattern has worked beautifully on the downside as well. SOXX moved outside the bottom of the Bollinger Bands on July 7, and it rebounded shortly afterward. When it dropped below the bottom line of the Bollinger Bands again on July 17, it rebounded again. When it broke below the bottom line a third time on July 29, it rebounded yet again. This is now 6 consecutive confirmations of this Bollinger Band mean reversion pattern working exactly as expected. Currently, SOXX is sitting right in the middle of the Bollinger Bands, which is actually a relatively neutral position technically speaking. If SOXX continues moving lower from here, I believe it has a good chance to find support and rebound again once it approaches the bottom of the Bollinger Bands, consistent with the pattern we just walked through. Regardless of the short-term path it takes to get there, I think we have a genuinely good chance of seeing another all-time high for SOXX sometime later in 2026. On this weekly chart, SOXX has maintained its position near and above the SMA 20 black line since May 2025, demonstrating truly remarkable institutional strength that has now persisted for over 15 months. Even more impressive when you zoom out further, SOXX has stayed above the SMA 200 green line most of the time since November 2010, spanning an incredible 16 years of history. I fully expect this powerful long-term bullish pattern to continue for many more years, even in the aftermath of a sharp crash of this magnitude. My broader investing strategy remains completely unchanged through all of this volatility. I contribute $7,000 annually into my Roth IRA specifically to buy SOXL, with a full 30-year time horizon guiding every decision I make. I continue using the SOXL surge strategy as my systematic framework for navigating these cycles. I avoid margin trading entirely in order to manage risk conservatively, which has proven critical during moments like the crash we just experienced in July. My focus has never been on perfectly timing the market. Instead, it is on using SOXL's extreme volatility strategically as a tool to build extraordinary long-term gains over time, rather than something to fear or avoid. That wraps up this special mid-August update. If this analysis added value for you, smash that like button, hit subscribe, and drop your thoughts in the comments below. I would genuinely love to hear whether you think we are about to see a repeat of that incredible 3-month rally from $39 to $302. Stay disciplined, stay patient, and keep building that wealth mindset. I will catch you next month for our regular update. Peace out, SOXL family.